with you here in this video, some of which coming out right away this morning, and some of which coming out yesterday and just over the last couple days here. Well, I want to share with you exactly what all of this means, as there's just a lot of uncertainty right now, but with these major changes that are coming out and these different announcements that are hitting the wire right now, we could be seeing a massive shift, something that we've been waiting for quite a few years now, and this could be very exciting for all asset classes, as you said with, or you see with the title there. These things could be going absolutely parabolic, and it may not be that much longer until we see all of these changes coming in here. So let's kind of unpack all this and talk about some of these major changes that are hitting right now. First off, let's just talk about really quickly here what the president just said literally like an hour and a half ago or something like that this morning. Here's what he said. He's implementing, or I should say teasing or threatening, a 30% tariff on Mexico and the EU. So the tariff situation is still playing out right now as we speak. This is going to be interesting. They're pretty big trade partners. In fact, Mexico is a very large trade partner, right? Canada, Mexico, the number 1 and 2, China number 3. So yeah, there you go. Mexico right there, included with this 30%. Now the president just said that, and again, this will be going into effect as of August 1st, which is, well, not that many weeks away. What is that, like 2.5 weeks away from right now, or so, give or take a little bit here. Okay, that's along with all these other tariffs that he's been announcing recently as well, that also to be going into effect as of August 1st. So yeah, it's going to be interesting between now and then to see what happens. All right, but anyway, let's talk about this other piece here as well, which I'm guessing at this point you've heard about this by now, but there's been some information that's been leaked. It started coming out yesterday that apparently Powell is considering resigning. Now, is he really considering that, or is he just saying that to kind of play into the hand of the president because, Trump keeps bashing him like every chance he gets, right? Too late Powell, and I mean, literally, the list goes on and on. All the random names that Trump has called Powell over the last several months here. But yeah, he's very displeased, I guess you could probably say, or at least he's making it seem that way, with the performance out of Powell. And then obviously this statement's out, what was it, yesterday, suggesting that the Fed is now losing all this money and they're doing a terrible job and this is gross negligence and all these different things, right? And here's the deal. They're just going to find any way they possibly can to continue to bash Powell. But the deal is, whether he decides to resign or not, his term as chairman is up May 15th. So however many months away that is, right? It's not that far away. But, mid-ish next year, May 15th, chairman of the Federal Reserve, Jerome, he will be out of there as chairman, right? So then the president will appoint his new chairperson at that time. Now, the speculation also at this point, the main name that I'm seeing coming up right now is Scott Bessent, who is the Treasury Secretary. Obviously, there's a few other names floating around out there as well. Kevin Hassett is also on the list. Governor Waller is also somebody that seems to be petitioning for a potential job here as the chairman. We don't know who that person's going to be yet, but it sounds like right now, possibly Scott Bessent may be that number 1 person on the president's list. Okay. Now, there's also been discussion of possibly installing a shadow chairman, right? So you saw me talk about that the other day in a separate video. But so a lot of different things happening. But let me get to the point here and why all of these different factors here unraveling at the same time are very important, and how this could be a huge, huge tailwind, like massive tailwind for all asset classes, okay? So let me just point that out, which, by the way, let me throw this out there super fast as well. Did you see the piece the other day? I think it was on, so today's Saturday, I think it was maybe on like Thursday, maybe, probably Thursday or so. JP Morgan was out in a piece, and they mentioned that there's $500 billion, this wall of money. $500 billion is what they're suggesting, this wall of money that's going to push the markets continuously higher the rest of this year. So who knows whether that's, totally accurate or not? I don't know. I'm just simply saying that's just what they've said. And we've seen other people out there suggesting that there's trillions of dollars on the sidelines waiting to come into this market at all-time highs. I don't know. Something about that feels a little fishy, right? Is it true, or is it just a bull trap, right? Again, we'll see about that. I'm honestly leaning toward a little bit of a bull trap situation right now based on what I'm seeing in the markets. We're just not seeing the follow-through that we should with the momentum and the volume that we should be seeing for a true breakout. I think this is more of a bull trap situation that's probably going to, reverse and, unfortunately hurt a lot of people, at least for the short term. But we'll talk about that later in a separate video. I don't want to get down that rabbit hole here. Okay, anyway. So here's what's going to happen, okay? Whether Powell stays through the rest of his term as chairman or not, whatever happens, here's what's going to follow, okay? The president is going to install the next chairman, whoever is going to be compliant with the president's needs and wants and demands. We already know this, right? The president will appoint the next chairman, okay? Now, the president is only going to appoint the person in which will follow his demands. What does the president want? Low interest rates. We know this. This is not a secret. This is not some mystery. He's made it very clear since last year, for probably, 8-9 months or so. The president has made it very, very clear. What does he want? Low interest rates. He's made that very clear. In fact, just a few days ago, I think it was maybe on Wednesday or so of this week, he was out suggesting that interest rates should be 3% lower than they're currently at right now. Could you imagine if they came out and lowered interest rates by 3%? That would be a gold mine for a lot of people. That'd be really good in a lot of good ways. I mean, that'd be really awesome for a lot of people who are sick and tired of paying these massively high interest rates on everything. We're tired of it. It's getting to be pretty old at this point. But here's the deal. Whether Powell resigns, and let's just say that he resigns in a month or 2 months, I don't know. I have not seen a timeline as far as his resignation, but apparently he's considering resigning. Let's just say in theory, he resigns in 2 months. Okay, whenever it happens to be. It could be in 2 months, it could be in 3 weeks, it could be in the end of his term, whenever it happens to be, whatever happens. When this happens, whoever the next chairman is, this person is going to come in. My prediction, by the way, okay? My prediction, I could be totally wrong on this. My prediction is they come in, whatever happens, whenever this happens, soon or later after Powell's term, whoever this person is will come in, and one of the first actions they will take is immediately lowering interest rates. Not 25 basis points, not 50 basis points, probably aggressively. Like, I wouldn't be shocked if they come in first time round, within days on the job, they come in and cut rates by 100 basis points, 1 full percentage point. Wouldn't be shocked if, weeks later or shortly thereafter, they come in and cut another 100 basis points to fulfill the needs of what the president has been demanding. 3% lower. Remember that number. The president wants the interest rates 3% lower. What is this next Fed chair going to do? Exactly that. Give the president what he wants. 3% lower. Okay, just remember these numbers as we continue to move forward. Now, how and why would this make asset classes go absolutely mental and absolutely parabolic? Well, here's the deal. It's all about access to cash. It's all about access to money, right? It's not that hard to figure out. When interest rates are very high, who's borrowing money at high interest rates? Not many people. Some people are, some businesses are. For the most part, not many people are, right? Only those people that feel like they absolutely need to borrow some money, or they absolutely need to do this one thing, or whatever the situation is, they'll borrow money at these high interest rates. But other than that, most people at these high rates are just sitting on the sidelines saying, I'm good. I don't want to pay 7%. I don't want to pay 8%, 10%, 12%, whatever it happens to be, for the respective item in which they want to acquire. They're just saying, I'm good. I'm just going to sit on the sidelines. I will not purchase yet until one of two things happen. Prices come down or interest rates come down. One of the two. They're not going to happen at the same time. Reason being is this. If prices and interest rates were to come down at the same time, number one, interest rates would probably stay low, but prices would immediately go right back up. Why? Access to cash, access to capital. When when interest rates are low and access to capital is easy, as in cheap money, that's, the saying that's out there, cheap money. In other words, what that really means is that interest rates are very low. When interest rates are very low and money is cheap, a lot of people borrow a lot of money, and where does that money go? It goes right into all asset classes. We've got stocks, crypto, real estate, everything. It's all there. Why? Because money's cheap. When money's cheap, it's easy to borrow money at 2-3%, and get a 5, 6, 7, 10, 12, 15% return. Who wouldn't make that trade every single day, right? It's like an easy way to make a lot of profit, right? And that's exactly what people do. The margin is there. However, when interest rates are sitting at, say, 7% or thereabouts like they are now, you know, and you want to make 7%, well, why would you do that? It makes no sense, right? So nobody's doing that. But when interest rates are lower, exactly as the president is demanding, and the next next chairman of the Federal Reserve, apparently I was combining all those words. Anyway, exactly what the next Fed chair is going to do, lower those rates down, we will see that massive parabolic move in these assets. It may take a little bit of time after interest rates come down, but I don't think it's going to take long, because there's going to be people rushing banks, rushing anywhere they possibly can to get as much capital as they can, and they're going to plow it right into these asset classes, making prices drive significantly higher. We've seen this before. I mean, think back to this. Think back to, say, like 2020, 2021. What happened? Well, a couple different things. Number one, they were printing $6 trillion of stimulus. That's number one. But also, what did they do? They lowered interest rates very, very, very low. Money was like practically free at the time, right? I mean, if we're looking at like mortgages, for example, a 30-year mortgage was like sub 3% for a little while. That's practically free. I mean, that's like so incredibly low. It's nuts, right? And as we sit right now, interest rates on 30-year fixed rate mortgages are like just below 7%. So, you know, it's a significant difference, okay? Anyway, that's the situation that I want you to watch for here, is that, number one, what's Powell going to do? Is he really going to resign, or is it just talk, right? Doesn't matter. Whether he resigns or not, his term as I keep combining these words, his term as Fed chairman will be ending May 15th, okay? Regardless of when that happens, sooner or later, the new chairman will come in and cut interest rates aggressively. Okay, so that's number one that we want to watch. But when that happens, that's when we're going to start to see things shifting in a massive way. So then at the same time, we're also likely going to see a very strong, very, very fast growing economy at that point. Because where does the money go? When people borrow money, do they just sit on it? No, nobody does that. Nobody borrows money and sits on it. That's the stupidest thing ever. Why would somebody do that? They might sit on it for a little while until the opportunity arises. But no, when somebody borrows money, they're plowing it into the economy in some way, shape, or form, or they're pushing it into the markets. It's going somewhere. They're not borrowing a bunch of money and saying, I'm just going to sit here on it, put it in my savings account, and collect 1% interest. Nobody does that. That's the worst strategy ever. Nobody would ever do that. Makes no sense, right? So anyway, the money will go somewhere. It's either going into the economy by, expanding inventories, or building up manufacturing, or expanding, or whatever it is in the form of business, or it's going somewhere. It's going into asset classes. It's going somewhere, and this will drive everything significantly higher. Not only that, it's likely going to drive prices higher as well. Why? Well, it's a simple supply and demand situation, right? When demand outstrips supply, prices must move higher. Simple supply and demand, right? Simple economics, that's all it is. We see that with everything. So when we see that supply and demand imbalance, we will see prices move accordingly. And when we see lower interest rates and everything moving up like that, prices will also adjust significantly higher on just everyday things, because that's just how it works. Supply and demand, right? Anyway, depends on how you look at this. This may be very bad news, or this may be very good news, however you want to look at it. But the point being is that, honestly, we're not that far away from all of this happening. And I just want you to be aware that when this happens, get ready, buckle up, because it's going to be wild. It's going to be absolutely wild to see this whole thing play out. And there's going to be a lot of money chasing a lot of different asset classes, and it's all going to get pumped. So anyway, I'm just very interested. I love watching this stuff play out because it's just super fascinating to me. But anyway, by the way, disclaimer, this is not investing advice. It's not financial advice. It is not advice in any way, shape, or form. I'm just some schmuck on YouTube talking about what I love to research and what I love to follow very closely. And I'm just sharing with you here in these live streams. Anyway, hope this helps you. I'm here for you in any way that I can be. Leave your comments down below. I'd love to hear from you as far as what you think on this. And this whole tariff thing, I don't know. I would be negotiating this very differently than what the president is doing. You know, everybody keeps coming out saying, "Oh, it's the art of the deal. Here it is, the art of the deal." I'm like, dude, this is a very sloppy and very ugly art of the deal. This is not how it's supposed to go. Um, I don't know. And again, I'm not here bashing the president in any way, shape, or form. I'm just saying I would be doing this very differently. But this is how he's doing it. Who knows? Let's see if he actually sticks to it. And if he actually sticks to this August 1st implementation of all these tariffs, or if he folds again and pushes another, 30, 90-day extension. We'll have to see about that. It'll be very interesting to see here. But the threats are out there. But honestly, the threats are losing their appeal. They're losing their strength because they continue to push it out. They continue to come back and say, we're going to delay again. Well, the threat really doesn't have much power or much validity at that point when they keep getting delayed. A lot of us just like, oh, just more smoke and mirrors, just another, wolf in the little, dressed up in a little red suit, whatever. Is it really going to happen this time? I don't know. We'll see. All right, anyway, I'll keep you posted. Super interested with this. Very interesting to watch this whole situation play out. Leave your comments down below. I'd love to hear what you have to say. And I'll catch you again later in the next one. All right, have a nice weekend. Thanks for joining me. Really appreciate it. And if you want, check out the main Blind to Billionaire channel. That's my main channel. I'm over here talking about stuff that people on my main channel don't care about, but I love talking about this, and I just want to talk to somebody about it, because honestly, my wife does not give a crap. And when I talk to her about it, she's like, stop talking. I want to watch TikTok. And I'm like, I want to talk to somebody about this. So anyway, that's what I'm talking about it here. Hopefully you care. My wife doesn't. People on my main channel don't care. So hopefully you care here. Anyway, if you want to check out the main channel, Blind to Billionaire, there's about 512-ish thousand subs over there. I have like 6,000 videos over there. I know, I'm a nut job. But anyway, enjoy, and I'll catch you again later. All right, see ya. Have a nice weekend. Okay, I'm going to unplug this. My phone's going to talk because I'm blind and I can't see it. All right, see ya.